The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I am Dollar Will. Let's talk about some money. I'll bring you up to date on the S&P 500. This is a key time in the market to really pay attention, to really keep your mind on your money on your mind. So what we got here is a chart of the S&P 500. This yellow area is a very critical zone here. Let's see. I am an Elliott wave theory trader. I also do candlestick analysis. And included in all of that is the common stuff of support and resistance that everyone else does. Now, in terms of Elliott wave theory, I think we have another swing coming. I believe that the recent high we've seen in the S&P as recent as yesterday, the 18th, this is high, right? Now, this is a weekly chart I'm looking at. Let me go to a daily. The high here, the 22nd, and that would be Friday, right? Yeah, I believe that's the high. I don't think we're going to go much further than this point where we are in this run. Okay. All right. Price is kind of traded up to this prior area here where the price kind of gave way. And it's kind of common for price to recover some of the losses just to fall again. And I believe that's what we're going to do. Now, ultimately, I'm not as bearish as most. In the longer term, I'm super bearish, but in the near term, I'm of the opinion that we're going to go higher than this, but not before we go lower. Now, if we fall below this red line right here, I hate to say the word technically, that's another thing. In terms of Elliott wave theory, it would invalidate the price falling below here. There will be no price structure no Elliott wave theory price structure that would confidently support the price making a higher high. So this is the last call. So we're overbought here, and so we got one more swing to go. I think that swing should stay in this yellow area. It shouldn't come down to this red line. If it goes below that red line, we are still likely to get a bounce up, but it won't make a new high. So once we get down to this area, no matter what, whether we go below the red line or not, we should then get a pretty significant rally. We may come back up to this area. But if we bounce above the red line, then my optimism will lead me to think that we're going to go above here. Not necessarily by much, but it would give people a chance to get their money back in this decline. And I'm saying this not only from looking at this chart, it's from my analysis of other things in the entire stock market. The S&P 500 contains the 500 largest stocks trading in America. Largest, not by company, not because by company size, but in terms of what's called market cap. It's let's say it's the 500 stocks that has the most money invested in it via the stock market. That's what it is. That's what market capitalization ultimately comes down to. That's it. So everybody's retirement account is feeding this. Um, so it's very important. But if we go higher, I don't think we're necessarily going to go higher by much, but it would give people a chance to get out. But to really understand what's going on, you have to look at those 500 companies and the industries that those companies belong to. And that's what I do uh, on my Patreon. I go deep into sector analysis and industry analysis. So, from a technical side. So companies belong to industries and industries belong to sectors, and money generally rotates from sector to sector and industry to industry more so than from stock to stock. So if you get the sector right and the industry right, it's pretty hard to fail after that, because most of these stocks move together when inside of their industry. When the weather, the economic weather favors that sector and industry, then the stocks in that industry tend to go up and down, like the whole industry, as the macroeconomic environment um, dictates. Even the garbage companies. Okay, that's what they mean by the tide raises all boats. The other side of that is it sinks all ships. So it's hard for a company to outperform its industry um, if the industry is overboard and in need of a correction. It really doesn't matter how good the management is in that company. It doesn't matter about how good the earnings were. None of that matters. That company's going to go through, that company stocks is going to go through a pullback, a correction, get become a value stock, okay, get devalued, okay. And so you have to remember that. So when the stock goes up or down, it's not necessarily a reflection on the company. So they're like macroeconomic factors, and nobody's hodling out here. You're told to hodl, but nobody's doing that. They're lying to you. They're calling you stupid, basically. They're saying that you're too stupid to learn. So you really should be offended when people tell you to hodl, and you can look on these charts and see the biggest, smartest, richest people selling. But they tell you to hodl because they need a source of dumb money out there. They tell you to buy on the dip because they need a source of dumb money to buy when they're selling. So they condition you to be stupid. You know, it's really true. Shout out to James Cramer of CNBC. All of his books, you buy his books. I got started. I'm an old guy. Okay, I'm 58. Okay, I started in my 20s, and some of the best books I read were his books, because his books are designed. The whole premise of his books, the premise is that you are smart enough to beat the market and to beat the so-called pros, and you really are, because the so-called pros, they're not as good as you think they are. The average um, uh, money manager out here, they're struggling to do better than 10 or 15%. Okay. So, but if you get into some serious technical analysis, you beating that all the time. Everybody over in my group is beating that. Okay. So, you can definitely beat the so-called pros. Okay. It doesn't mean that they're better. Okay. So the real pros are the people who's making money, and the people who are really making money, they don't typically handle other people's money per se. Like they might trade for a firm, handle that money, but they don't necessarily not working as advisors and things like that. I know that's just the way it is. When you get in it, you'll see it. You'll start, if you'll be like, okay, at the money that I'm making, how much could somebody pay me to work for them? And it's very hard. So the closest to being an employee that a really good trader comes is if they're working for a firm, some prop firm, proprietary trading firm. Um, so a lot of the folks that tell you I worked on Wall Street. You need to ask them questions to see were they pressing the button, making the trading decisions, or were they in a sales capacity? 90% of the people that you come upon who tell you they worked on Wall Street, they were in a sales capacity. Nothing wrong with that. Okay, no slight on them. It's good money. It's a good career. It's a vital function that they provide. But I'm just making a distinction between them and the people in the back office that's pressing the button. So a lot of your traders on YouTube, they are a whole lot closer, or they're basically in essentially the same field as the people in the back office pressing the button buy and sell. And that salesperson is really kind of light years away from that. Because if that salesperson was a good trader, they would quit that job in sales because they couldn't pay them. The company wouldn't be able to afford them. They would be making too much money. All right, let me see. Let me show you the industry. This is year to date. What's been going on in the across the various industries. So we see that the best performing has been periodicals. That's amazing. That's amazing to me. These periodicals are ad revenue based. Okay, so the fact that I kind of look at this as a sign that everything else has been doing so poorly, not that periodicals are burning up the place. 38% um, gain since January 1. That's okay. You know, for industry. I mean, actually, it's pretty good for industry. But when you have heavyweight hitters like energy and petroleum, and that's what a lot of these are, machinery, printing, oil and gas, oil and energy. And so you see the thing, building and maintenance. You kind of get it. Oil again. You kind of get it. Semiconductors. So publishing periodicals. Okay, so I think the fact that they're number one is just showing you how difficult it has been for all other industries. And on the low end of the scale, the worst performing. So all that's red. Look at all that. Look at all these terrible performers. Um, Retail, okay, regional department stores. All right, that shouldn't come as no surprise. All right, rubber tires. Nobody's buying cars. Okay, now gold is starting to bite it, and jewelry, of course, and all these are examples of what happened when the U.S. dollar is strong. I'll be doing a separate video getting into the dollar, showing the relation between the dollar, oil, other energy and metals. And so you'll see, and so when you hear energy and metals, a lot of that correlates to housing, a lot of things that go into building a house. So you tie that in with the material costs. I'm sorry, the dollar is rising, and so that's like destroying the everything related to those materials. Okay, and the dollar rising correlates with the interest rate rising, and so a rising interest rate is just bad for business. It increases the cost to carry debt, and everybody we're coming out of basically uh, a cycle where cash was trash, and the way to make money was to charge it. Okay, but we're transitioning from uh, cash is trash to cash is king. Okay, and so your mind has to flip, and you have to see debt as bad because the profit you get in quarter to quarter is going to be less. It's going to start to go down. And so now, meanwhile, the interest payment on that debt is going to go up. And so now companies are going to be trying to get rid of that debt, where in an uptrend, when the economy is growing, you're really not caring about paying off the debt because your profit keeps increasing every quarter. And so, you have the money to pay it, but why? Why pay it when you can just roll it back into the company? But that works until the economy stops growing. And so now you got a race to get rid of that debt. Okay. So this ain't the time to storm into your boss's office and ask for a raise. This ain't it. That would be a bad play. Okay. This is not the time to start talking about money to your boss. Okay, this is the time to bring value. You know, but that's kind of all I got for the S&P. So want to watch this thing as it comes down and watch this area here. And I'm really concerned about this low right here in September of 2020. So we are approaching 2 years, uh, 2 year anniversary of that area, and that area has to hold. Um, if we go below that, my whole tone and tenor is going to change. Although we're likely to get a bounce up, um, but this will be officially the hell trade in my mind. You're going to hear me get incredibly more pessimistic. Okay, but if we can stay above that point, I think we can get another one. Okay, so stay tuned to this channel. I'll be talking about some of the other industries and show some areas where you can make some money. And one is coming up soon. We're going to get one of these bounces. Some industries are likely to make brand new highs no matter what happens over here. Okay. And I'll be talking about that stuff. So let's see, where's my I'm going to get out of here as soon as I can find my deal to close out. So y'all stay with me and get on that Patreon, y'all. Check it out. The name of it is the same as my name, Dollar with 2 L's and Will with 1 L. Okay. Check it out. It's the cheapest you're gonna find, and you're gonna get the best education you ever had about um, the economy and trading from a real trader with other traders over there. And I guarantee you, if you come and stay 1 month, you're gonna be like, "Wow, I should have been over here a long time ago." All right, peace, fam.